back to the recession. It's obviously not good news at all. And all the spend in the world not going to fix it. So what does this mean for the rest of us? Joining me to discuss, host of Making Money right here on Fox Business. He's had a very busy day because he's the best one to break all this down. Charles Payne. Welcome back to the show, Charles.
Yeah, you know what? I've gone through the numbers and gone through the numbers and gone through the numbers, trying to find what Joe Biden's talking about. Although, Kennedy, they are pretty slick. Think about this. He said it was the strongest rebound. And I think that's important in manufacturing because we just now broke even on manufacturing jobs from February of 2020. We still have fewer jobs than we had in February 2020 overall. And I think that's where you have a lot of folks who are trying to say, well, it can't be a recession because of all the job growth. No, these are jobs that are being replaced, that we already had. This is not really authentic job growth. We're not even past where we started when the pandemic hit this country. So it's all semantics, to your point. And it's disingenuous. And I think, I'm going to tell you the irony of all of this. If you look at the polls, what people are more worried about than anything else is inflation.
Yes.
Inflation is here, and then you start getting other things. Recession is down here. President Biden, I'm telling you, these guys just, I don't understand. All he has to do is say, yes, we're in a recession. We've got the Fed trying to tame inflation. And once we come out of it, we think we'll be healthier. They need to embrace it. They need to learn judo. But instead, to your point, everything has to be massaged. And listen, they're just not truthful about things. And it's just gotten to the point where it's just frustrating.
Yeah, and they are changing definitions. You have people within the administration who a few years ago were saying a recession is 2 consecutive quarters of negative growth. And now Brian Deese, who works for the president, one of his economic advisors, is saying actually that's not what a recession is. They say, well, that's the technical definition. And then Janet Yellen's like, well, that's not the technical definition at all because we really have to have job growth factored in there. And they keep relying on this job growth. Right. But then Jerome Powell is saying the job market is unsustainably hot. So now the Fed is coming in trying to raise rates, forcing people to fire other people. So the unemployment numbers are completely opposite.
Jerome Powell is trying to break the back of the economy. And here's the thing, it's already broken. And that's why a lot of people really were happy yesterday when it seemed like he had a couple glimmers. Maybe, if they get the right signal, they'll call it off, right? But right now, this is why the market's at the first worst half in history. Between the stock and the bond market is the worst first half for that so-called 60-40 portfolio in the history of investing. The market's already sniffed this out, that we're in a recession. In fact, if you go all the way back, there's one time, 1947, when we had back-to-back negative quarters and we didn't go into official recession. So they're wasting their time. They really are. No matter what, if you use the National Bureau of Economic Research, if you use the Magic 8 Ball, whatever they want to use next, eventually it's going to have to acknowledge that we're in recession. And it's a moot point. What are you doing about it is what the American people want to know.
Yeah, but they love pointing to that bureau and saying, well, they don't meet very often. And they're the ones who really decide. And this is a private group of bipartisan economists, and they look at all sorts of data. I'm sorry, that's too nebulous. We need something that is more straightforward and transparent, just like the president should be. But he's incapable of doing that right now. So, Charles, should people worry? Because the administration has tried to downplay not only recession, but also inflation. And now the president is saying, well, we're in for a period of slow growth. So you add slow growth to inflation, you get stagflation. That's a pretty horrible environment when the Fed doesn't have a lot of wiggle room in terms of rates.
You're absolutely right. Stagflation is a real threat. It's lurking out there. And again, you've got them trying to pass these multi-$100 billion packages that got us in trouble in the very first place. Jerome Powell can only control so much, right? And the notion that he's got to somehow deliberately make people in this country poorer, put people out of work, is really on the heels of inflation, is really despicable. It's his job, but certainly the White House isn't going to make it easier. And Janet Yellen, I thought today was in a hostage video. It was embarrassing. She's a brilliant woman. She's a Keynesian, and she's what they call a new Keynesian, as a matter of fact. But she knows better than the stuff she's saying right now. It really is embarrassing.
So she has become a political operative when, she was very much for a long time an agnostic economist and someone who was considered to be very trustworthy in her former roles. Right. So is this job too big for her, and is it too big for Jerome Powell? Should both of those people be replaced?
The job is too big for anyone who wants to be honest. And unfortunately, I'm not sure why, she is succumbing to this pressure. Maybe it's just amazing. Maybe everyone's piling up on her. If you notice, the last couple of weekends, she didn't make the rounds, right? They sent a whole lot of other people out, Cecilia Rouse and others, Brian Dees. They put her on the bench, and they probably gave her a talking to. Listen, if you want to be out there, if you want to be the face of the economic face of this administration, you got to get on board, even though you know what you're saying is wrong. Yeah. It looks like she's made a Faustian deal. It's unfortunate. Jay Powell, yesterday again, he was pained. He was so pained at what he has to do. He even mentioned how great the economy was right at the beginning of the pandemic. And you can tell, August 27th, 2020, Kennedy, he wrote a special paper. And that's when he made this shift to this sort of social justice Fed. Whether you think it's right or wrong, he said, listen, in the past we've looked at unemployment numbers, let's say 4%, and we've said, okay, we'll change gears. But when we look beneath it, black unemployment was 8%, Hispanic 7%. We want to bring it all down. We want to bring it down for women. He referenced that yesterday, and he was painful to say, I can't get you there. We're going to have to deliberately make it more painful for those groups, especially to beat down inflation, and then maybe we can try to get back to where we were when the pandemic hit.
Well, I don't trust that they'll be able to beat back inflation, and I don't trust that they're going to be honest with us when it does become a full-blown recession by anyone's definition. Charles, you've had a long day. It's been a great day in terms of your expertise. I've been watching every minute. Thank you so much for being here tonight. Thank you.